Good morning, guys. Welcome to this Friday, June 27th. It is Friday. Thank God it's Friday. It's been an interesting week, hasn't it? The whole Middle East changed in this week, and market is reflecting it. And we are just uh, extended to the upside. We broke out. We took out resistance, the upper levels. We are holding, and so far it looks like it is not, at least not for now, an appetite to sell into this. So I'm thinking long side of the market. I'm thinking these guys are going to try to take it higher. Getting into that part of the summer where we usually get some weakness, but if you see what's going on in the world economy and on the geopolitical stage. It's not really a lot. The whole playbook is kind of changed this year, so I would probably stay in the market, not take off a lot, not risk off in June as you usually do. It doesn't mean that you may not have sell-off happening in July and August, like the seasonal weakness, but it's definitely has a lot of winds in the back to in this economy to keep going. Now, this news we have this morning, this is PCE Friday. So we get the personal income and outlay number at 8:30. And so we got to get an inflation read. I haven't seen a margin requirement change from AMP this morning. So I guess these inflation numbers are getting less and less dramatic, which is good. So we'll see what that comes out to be. But you expect some reaction there at 8:30 in a few minutes. So personal income and outlays at 8:30. We have consumer sentiment at 10, and that's about it for news. And I think it's market is still just in that mode. I mean, after they came in, we had that initial gap down. That was Monday's little gap down based on the bombing, and then it started just recovering from there, and we haven't looked back at all. That's took out resistance, heading higher. This attractor up here at the 6150, they held that for a little bit, and now they blew through that yesterday and are extending in the overnight. So we are in at new highs, and we are looking to the market to trade higher. I'm just going to do this. I'm just going to scroll it up and I have to pull back up my little F1 there. Let's see. There it is. So that's the dive into it. Starting off from the long side of the market. There's no reason not to. We are making new highs. If I would be watching this area right here for a reverse retest, that would be the potential for if you see some weakness, a reverse retest of this area, the 61, 65s down to the 45s by the 20-point range. And if that range comes out, yeah, I would start looking for a retracement trade at that point. Then we can look for a potential retracement trade all the way down here to the 6,000. So we'll see if they. I don't think there's quite the appetite for that just yet, but it's you just never know. And you always had to have that continuous in the back of the head. But at this point, starting off from the long side of the market, I'm looking to buy weakness. At this point, I think 62.10s, 6200s, 6190s, 6180s, 6170s for rotations back up now. 6160, the low of the day session low of yesterday, 6160 here. That starts coming out, then you're going to have some problems. Here, the little attractor area right there in the short term, 6145 to 50. That's your high volume area right there. That's your attractor. So if they start taking out this 6160, we're going to be back at this attractor. And I would still be looking for buying opportunities all the way down to the 6140s. But below that one, they take out that low volume area, I think bets are off. So I would say it's starting off on the long side of the market. They're going to buy weakness down to that 6190. If they start trading below 90s, I maybe give it down to the 80s here. Take off the long buyers, go back range bound, look for further retracement. Still look for buying opportunities all the way down here to that 6145 to 6140 to 6150. These two support areas comes out, bets are off. I think at that point we have confirmation that we're heading lower. You can always have this rundown when they run at level below the obvious and stuff like that. But if you're down trading back down at the 6140s, they reverse this little breakout at that point. And I would say that they start trading below that 6180s. I think they are well on the way to reverse that breakout. And I would start off I would take off the long bias. And it doesn't mean I'm not going to look for buying opportunities. I think if you look at capital flow, we are pointed higher, and you want to trade with the capital flow. A lot of hedge funds, a lot of money on the sidelines are going to come off the sidelines. You see, if you watched gold this morning, you see how people are selling gold and most likely looking at rotating into stocks. So I'm thinking stocks has a way to go yet. And so I would not be aggressive on the short side. Any bigger shorts are going to be probably a bad call right now. And yeah, so you have the money sitting on the sidelines going to start pouring in. And you also have short positions. People who have been short this market on the way up. They are hurting now. So I mean, when they start covering, I think a lot of them have covered. But as you cover, you also drive the prices higher. All this stuff together, though, when it runs out, could also result in a pretty good pullback. So, and that could be as a pure technical pullback. So we can see it run all the way down here to that attractor area to 61.45 pretty easily when it starts. But I'm not sure that quite ready for that just yet. So starting off from the long side, looking to buy against that 62.10s, 6200s, 6190s, 6180s, 6170s. They trade below the 80s. I'm taking off the long bias, going back more range bound. Still looking to buy against the 70s, 60s, down to the 50s and 40s here, but they start trading below the 40s. I'm thinking short side of the market retracement at that point. Now, they could be, of course, I mean, if market retraces that far, there's short opportunities on the way there. So as you start taking out a couple of support areas, you can, if you want to be aggressive on the short side, you can try a short trade on the way down here between levels. Just have to be mindful that you don't sell into the 6190s. You don't sell into the 6180s. Just try to wait for them to start taking this lower before you try your short trade. And it's but that is sometimes you see that happening, and they run it pretty hard to the downside early on, and then they reverse it right back up again. But on the way down there's always opportunities for shorts. It's just a little bit more aggressive trading, and if you the better setups are probably going to be on the long side for rotations back up. So that's how we get started, and we know when to change our mind if something else is going on. Now, PCE, if that comes in as a surprise for some reason, it could certainly set the market off to the downside. I don't think that's the case right now, though. And with the inflation read, it's kind of has been muted for a few reads, and it will have to be a pretty big surprise for the market to react in a huge negative way and turn off this trend at this point. So stay with the trend on the long side of the market at this for now, and then let's see how it goes. Looking at our oil and gold. No, what I'm talking about. I'm looking at the NASDAQ and the bonds. There's my NASDAQ and the bonds. Jumping off to oil and gold too quickly. There we go. So bond market grinding higher. I mean, they have been slowly moving this to the upside. But split out that Y period. You see that they're building value right up here in this distribution. And they have been bouncing up against this low volume area, this volume edge at 115 right now. So I would say that I would stay range bound. I would keep a slight bias to the upside to see if you can run this higher. It looks to me like they're trying to take it higher. So but it's still, they had to clear this 115 edge. They've been up at 115.06. So if the 115.06 comes out, I would look for them to run it up all the way up here to the 116s, maybe even up to the 117, 15, 16 here. So you have a pretty good attractor up there. It has to get past this low volume area first. So that's the bonds. Starting off range bound, watching that upper edge pretty carefully. Still looking for shorts against it at 115 and 115.06. But when that 115.06 comes out, I'm going to start on the long side and see if they can run it higher, because there's some range, there's some room on the upside for them to take this higher. If they start trading lower, looking to buy against the 14.22s, 15.16s, 114.10s for rotations back up. I think below 114.10s, I would start looking at this more of a directionally to the short side. So that's how we get started on the bonds. It's been pretty calm on the bond side of things. NASDAQ. That's one guy leading us higher. Big tech is doing well. So Microsoft is almost up at $500 right now. That's pretty spectacular. So when Microsoft rally started a few weeks back here and has been going pretty darn good. Nvidia just broke out to the upside, and so far they haven't done that classic knockdown, which has been happening all over the place. It's been consolidating for almost a year now. So Nvidia is starting to move again. And so you got some big techs moving, and that's driving NASDAQ higher with a vengeance. So look at that from the long side of the market as well, same as the ES. So on the NASDAQ, looking to buy against the 720s, 690 to 700s, 650s to 60s, rotations back up. I didn't put anything in between there. I'm going to wait until they get to the 570s. So 570s and 550s, it's going to be the area I take off my long bias. And that would be at the 550. Yeah, it would be at around about this area right there. If that comes out, I'm going to be looking for rotation down to that 420 attractor area. Now they start taking out that 420s or 400s. You can see them retrace all the way down here to this. So you're going to find some support at the 250s and then back down here at the 200s. So we can see a pretty good retracement if they start taking this lower. Right now, though, I don't think that's in the card. Even if I always mention it just in case. You never know when you get a headline or something come out and things doesn't work out the way you expect it to. So look at the buy weakness at this point against the 720s, 690s, 660s, rotations back up. If the last one to buy against is 570 and the 540s, below those two, I'm going to take off the long bias and go back range bound. And if it starts trading below that 420, that's your little attractor down here. That's when they had to kick in on the short side. Still looking to buy against support at 470s and the 440s down to that 400s. That's a little bit less aggressive because at that point you're back range bound. And if it starts trading up from there, you're looking for short setups, a little bit more aggressive on these resistance areas. But at this point, there's still support, and let's see how far they can take it on the upside. So early weakness, I would say, is going to be 720s, 690s down to maybe to the 650s. You start probing into this area, start getting a little bit worried, but it could be nice short if they take out that low all the way down here to that 580s. So anytime you have that early morning weakness when they start running this lower, there's always that opportunity for a short trade. You just have to be a little bit more aggressive on them because when they're leaning into that thing, there's volatility and they are hammering it, and you had to be nimble and on your toes, and it's easy to get shaken out of a trade like that. The bread and butter kind of a trade we're looking for is then to run into support, stall, and retest it, and then fail. That would be the ideal retest failure trade. You don't usually see that on the early weakness move. You more see this big algos, institutional kind of selling, early selling, and then they start turning it when they hit support down here. So look to buy weakness, early weakness, the 570, 580, and 540s. Look for buying opportunities there, but below that one, I'm taking off the long bias and going back range bound. Still looking to buy against the 480s, 440s down to the 400s. Below 400s, bets are off. We're heading lower at that point. All right. Now, I notice I haven't said much about short trading, and so I'm not going to be very aggressive on the short side on ES or NASDAQ. We are in the move out of the middle to the upside, so I'm not going to be stepping in front of it. There could be short trades in there. I mean, you have opportunity you see right there. I mean, if you traded that retest and faded that heat, you would be in a decent trade. But so there's short opportunities. It's just not as high probability, I would say. So I would favor the long side to see how far they can take it there. And try to be patient and let the market come to your level before you engage it. I have a tendency to want to overtrade it. That's just in my nature, but it's something you're gonna have to work on. Everyone is different, but it's you know what your weaknesses are, and it's that kind of work on them. This is interesting, oil and gold. All right, so here we have, let's touch on oil quick because that's not going to go quickly here. So oil just sitting in a range. They are flat out stalled. They backed off pretty hard. The whole risk premium came off, and they're sitting here right at that high volume area at the 65s. Watch that 64 low volume area. If that comes out, they're going to be right back down in the 61s again. So I'm waiting for that move. I'm not seeing them trading this a lot higher. I'm not seeing that. It could be a demand situation which causes that, but it's at this point I would probably be more inclined for lower prices on oil. So, but they're sitting here in the range consolidating right now. So if it starts trading above that 66.30s, look for retracement to the upside. Even if it feels counterintuitive, that is what's going on at that point. And if they start taking out this low volume area to 65.40 and the 64, this support area, then start looking at this from the short side and look for that to move all the way down to 61. So looking to sell strength 65.90s and the 66.30s. Looking to buy weakness 65.30s, 65, 64.80s down to that 64.50s. Last one would be right here at the 64 low volume area. So looking for buying opportunities all the way down to that 64 level. But below that, I would say they broke through and they are heading down to that 61.80 at that point. That could be a beautiful short if you manage to stick on that one. Or get on that one and stay with it. So oil range bound right now is traded as such until you see the media starts trading above that 66.30s or below the 64s. There could be another short up here against that 66.90s, but I'm going to just be mindful about that. But it's I would say they start trading about 66.30s. I would probably stay on the long side and see how far they can take it. All right, so that's oil. Gold, that's the interesting one. That's the really that one absolutely kind of fell out of bed this morning last night. So, or in the overnight, I should say. Let me see my capital flow on gold. So gold, I would think this is a rotation out of split out my Y period. I would say that gold is right now in the move out of the middle to the downside. You see a big move. And that right at that low, that volume edge you talked about before, this is a big vol area of range bound trading. This edge down here at the 39.90 or 32.90 to 33s, or is the area to watch. It's not taking that out. I think they can run. They will see a test of the 32.60 low volume area, maybe even a run down to that 32.30s. You could run that far pretty easily, but they first had to get through the low volume area. So right now it looks like they're probing into it. So I would stay on the short side and see how far they can take it, but it feels very much like a move out of the middle to the downside. So we'll trade it as such. Not going to be stepping in front of it. I'm going to look into sell strength against the 32.90s, 3300s, 3308s for rotations back down. Above 3308s, I'm going to be back range bound looking for a retracement trade right back up here to the 3320s. So yes, that early weakness, these three levels, and if it trades above it, take off that short bias and go back more range bound. All right. So that's how we get started on gold. Moving lower, I'm thinking this is more related to rotation at risk off kind of a move and back on stocks. Since stocks are rallying and you want to be on that rally when it starts kicking off. That's going to be if the stocks keeps going, that could be a spectacular move to the upside. And think about it. So the market just got the whole Middle East situation sorted out, right? That's been going on for 40 years. The market is still repricing that, what that potentially could mean. They have trade deals coming. They have a potential big, beautiful bill. We'll see if that one comes through. And I'm not saying anything on that one. I'm just see if they get that done by July 4th and in the next few weeks, that's also going to be something for the markets to rally around. And there will be a lot of things happening, positive things happening in the economy. And the market's most likely going to react to that. So at least in the short term. So there we have it. So back to the ES. And we got about 5 more minutes before we get the PCE number come out. So I'm going to go get some coffee. And going to say good trading, guys. It's a Friday. It's summer type trading. Volume has been to the downside, so just be aware. But we have a pretty good piece of news come out in a few minutes. So good trading. I'll see you back at 11:30 for the next update. If I could spell. There you go. Good trading, guys. I'll see you back at 11:30. Later.